Hello, everyone. My name is Robin Dolezal, and with me today are my colleagues, Alex Pars and Dan Nentel. Together, we are with Ironwood Financial. If you've missed any of our discussions or our videos, you can find them right here on our Facebook page or our website, ironwoodfinancial.com. Good afternoon, gentlemen. How are you guys today?
Good. How are you?
Doing very,
well.
very well. Dano, how are you doing, sir?
I'm good. I'm actually, I'm laughing a little bit because if I'm not mistaken, this is the first time since maybe mid-March that you and I have been in the office at the same time, and I can hear you.
Yeah, I know. We're doing this video, and there's one wall between Dano and I. All right,
Well, you don't need,
so what's that?
you don't need to be 6 feet apart if there's a wall in the way, you know?
That's right.
That's right. So we've got a lot of interesting things to talk about here today, boys. But let's as always, we try to find something that's light and to talk about. Alex, you have been following this story for years, and we were talking about this morning. Why don't you start off with that?
Yeah, there's a fellow who basically hid a treasure chest in the Rocky Mountains. I think it was 10 years ago. And the theory was it was filled with precious metals, gemstones, other valuables. And he wrote a book. And I guess this is just a clever way to get you to buy his book. But you go out and you read the book, and the book gives you hints on how to find this treasure chest. And his theory was this was a way to get people off their computers, out into the wild, doing outdoorsy stuff. And the theory was it was worth over $1 million. And you've seen articles through the years, or I have at least, of people thinking they know where it is, or getting lost, or getting rescued or whatnot, trying to find this thing. And supposedly on Sunday, they actually found this treasure chest. So the great hunt is at an end. The author has confirmed that it has been found. They have not yet told us the contents of the chest, but I'll be looking forward to see what those are.
Yeah, that's kind of exciting. So the author is actually still alive.
Yes, although he is rather elderly. I think
Yeah.
close to 90.
Oh,
you're kidding.
No? So.
Well, that's kind of fun.
Yeah.
Good. Well, I don't guess you're gonna have to find something else to follow.
Yeah. Dan, you saw a funny comment this morning, right?
Well, that's something you can follow. You can follow the costs of oil, barrels of oil. I actually was stopped today, and I stopped at a gas station, filled up my car, and obviously we're all kind of delightfully surprised on how much it costs. But I was reading an article today, and it was big headlines, shocked, saying barrels of oil up $80 in the last 7 weeks. Well, you have to remember there was that half a day where barrels of oil were selling for negative $39. So it's still sitting right at $40. In fact, it hasn't moved at all, but the headline made you think that you did quite well had you bought oil.
I saved a snapshot of that on Yahoo Finance onto my computer because I figured I don't know when we'll see that again. I figured I'd pull that up.
Well, ideally never.
Yeah, right. Yeah.
So.
All right. Well, let's get started. So, what is it official now? Or we've declared a recession?
Yeah, the National Bureau of Economic Research this week declared that we did have a recession. They didn't specify whether we're out of that recession or not, but what was kind of funny about it was that there is no true definition of recession. They said this doesn't fit any of our normal, descriptors of what a recession is, but this one just felt bad, so we decided to go ahead and call it.
Oh, well, that's an interesting way of doing it.
Scientific.
And Dan, what was the months? You said it was something like 132 months?
128 months of economic growth.
Yeah.
Okay, since the last recession. And so, although this could very well, they said this may not stand up to the normal test of time of how long a recession goes on for, because again, recessions are typically declining economic growth. And again, economic growth probably bottomed out in April, and we've been growing ever since.
Right.
So,
yeah, we had talked about that weeks ago. If it's so bad and we just get some even just increment, inclines, then we'll be out of this, right?
Yeah, well, out of this is the wrong word, but yeah,
right.
out of the recession.
Out of the feeling of a recession, I guess.
Yeah, as soon as they turn the light switch back on, to use that analogy, the recession's over. So,
right.
But it's interesting because we've talked about how the stock market, it really appears like things have come roaring all the way back and are at an all-time highs and or close to the beginning of the year, even though, as we talked about last week, the U3 unemployment rate somewhere between 14 and 16%, and the U6 unemployment rate is still over 20. So how do you get these over, this really expensive markets with those bad economic data? And the answer is it's not necessarily the whole markets, and people keep forgetting this. They look at the headline number, and at first it was the NASDAQ got back to its year-to-date high and
Right.
then all-time high. And that's technology. Those are the things like Netflix, like Zoom, that have done really, really well during this lockdown and continue to do well as economic activity is still depressed. I mean, I don't know about you guys, but like from all the clients we've been talking to, their spending is still significantly down just because you can't do the things you want to do.
Sure, right.
And maybe those, and people are starting to anticipate that spending will come back, but will it come back all the way? So, we've been talking to a lot of clients, looking at our portfolios, and really it's the S&P right now, which is close to coming back, and the NASDAQ, but, small caps, mid caps, value stocks, international stocks, a good part of our portfolio at the beginning of the year still has not recovered to its all-time high. So it's really, again, a headline number that's, once you dive deeper into the data, you see that it's really just tech pulling it up. So
and it's not even just tech, right? It's just you got a lot of American investors with FOMO who are driving it up, it seems like, as well.
And yes, driving up, true, but things haven't recovered. Okay, a lot of sectors, oil and gas is still off 30%. Airlines, et cetera, those are off, 35%. Financials, 15%. Small caps, mid caps, 10 to 15%. Quite a bit of the economy and the stock market is still depressed by more than 10% at this point, which is good because we're still finding, some, relative bargains compared to these tech stocks that are trading at 10% above their all-time highs, or don't have the fundamentals, the PE ratios to justify it.
Mm-hmm.
So
we've got a lot of money from the Fed that's helping too.
Yes, and that's there's a Fed meeting going on right now, and we'll see what they decide. Probably nothing earth-shattering at this point, because you can't just dump 1 million gallons of water on a fire and then just keep dumping water on it if it's maybe out. I think that the greatest risk to the U.S. economy has passed. The medical data, the medical professionals are still saying be safe, be careful, but I think enough people are doing that we hopefully won't see a significant spike or another set of lockdowns due to the coronavirus spike later in the year.
And with their meeting, I know today, are they meeting today and tomorrow and then announcing tomorrow, or what is their itinerary?
Today and tomorrow, and then they will actually, Jerome Powell will actually talk tomorrow at the conclusion of the meeting to let us know.
Okay.
And so that's the question is I mean, there is talk, because they've done it in Europe, that if they're really worried about the economy, that they might go to negative interest rates. And so I had a question today, and it's very common for us to say, well, negative interest rates, well, that's outstanding. That means that if I take a loan, they're actually going to pay me to use their money. Well, that doesn't quite translate that way. It's not necessarily for the general public. What it really is for the big institutions and the Federal Reserve. And the Federal Reserve effectively is saying to these large institutions, we want you to stimulate the economy. So we're going to give you money, and we're not going to charge you for it, or we might even pay you a little bit, really insignificant amounts. But we'll pay you, Bank of America, to lend that out and try to loosen up your requirements to do the whole trickle through the economy, because people are getting very low interest loans for that. But the banks are going to do quite well in that. In fact, there was an article today in Bloomberg talking about that spread, is how unfortunately all these people are getting the $600 unemployment check, but we're going to turn bankers into billionaires kind of thing. So there is some negativity to it. Most people are convinced that the Fed will not lower interest rates to zero. The other part about that is we've talked about many times, which is if the bank's getting paid, you would think they might give us a little bit of extra interest on our savings account. The exact opposite is true. So again, it's the Fed doing one of two things: let me give banks a bunch of money so they lend it out so we can take it and put it through the economy. And let's make safe investments so unattractive that people will take their safe investments and put it in the stock market and real estate, which again is a big stock market economic driver. So it's a big meeting today, not as exciting as it's been the last couple quarters. I have a feeling that
Hopefully we never get that exciting again.
exactly right. I have a feeling they won't do anything. In fact, that's what most people are predicting.
Yeah.
Yeah.
That makes sense.
Now, interesting enough, we were talking about Alex talked a little about the virus, the COVID-19, and we were having an investment meeting earlier, and Alex brought something up that I find kind of interesting. The market today is moving as if we don't have any data that says this is the case, but the stock market's moving as if there's going to be a spike in cases. We're seeing the things that are perfect for shelter in place, technology, things like that go up. We're seeing entertainment, leisure, rental cars, airlines go down dramatically. Obviously, that's not scientific, but it's interesting that it's happening today because there's no data that should back that up.
Right. Well, and that's one of the things that's, this concept of priced in, what is priced into this market right now? And so far from what we've been telling is they've been ignoring economic data, and the only thing they've priced in is the Fed actions. So it's very possible that the stock market does actually price that stuff in someday.
And Robin obviously talked about FOMO, but I think the FOMO very much so is, hey, we're gonna be able to back out. We get to go to the beach. We get to go out to restaurants. We get to go to a movie theater. Hopefully that's the case, but who knows? I don't think that's going to have the economic input or punch in the arm for profits to be able to sustain this current stock market. But who knows? Because the Fed may decide it's perfect.
Mm-hmm.
Yep.
Yeah.
So I'm going to throw our slide back up.
Sure. Yeah, this is pre-recorded, so we won't have any live questions today. Obviously, if you've watched this and you have questions about what we talked about today, please don't hesitate to reach out, and we will get back to you, or we'll address it on our next video. And if you are watching this and you're not a client and you have questions, we'd love to have a conversation with you as well. You can either find us at our website, ironwoodfinancial.com, or you can reach us toll free, 888-271-4646. Always great to see you guys and have these conversations. I hope you have a great rest of the afternoon. Until next time, stay safe. Have a great day.
You guys can yell through the walls at each other now. Right?
That's right.
Thanks, guys.
All right, take care.